Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news headlines in the mining space this week. Joining me today once again is Christopher Ecclestone, Principal and Mining Strategist at Hallgarten Plus Company. Chris, welcome back to Kitco.
Hi there.
Now, please note, Digging Deep is not investment advice, and the opinions expressed here are our own and not Kitco's. Spring is well underway, Chris. How's spring treating you so far?
It's England. It's been wet, wet and not warm.
Okay, well, somebody who's had their parade rained on perhaps is BHP, which retracted a $49.2 billion US bid to acquire Anglo American. BHP is now barred from buying Anglo for 6 months unless a competing offer emerges. Anglo is now spinning out its diamond and platinum businesses to focus on copper and iron ore. Chris, do you think that what happens here bears any similarities to what happened a year or so ago with Teck Resources, a hostile bid and an eventual breakup of the assets of the target and eventual sale of some of those?
It has elements of it, but Teck had to be sort of dragged screaming and kicking to the transaction, whereas Anglo's first response was, let's break up. And obviously, I was reading a release this morning when they announced the breakup, and it seemed like it was already on the table and they'd been talking about it inside as a value releasing mechanism. Could have been that BHP had heard about this and decided to preempt it with their move. But Anglo brought that out there, and I think it's a great deal. I like it. I love demergers because I always find that the assets, when they're set free, are collectively worth more than they were within the original structure. And that's it.
Well, when BHP made its initial bid, it had a whole bunch of conditions, and some of those were the divestment of assets. So in some regards, It seems like Anglo is now doing what BHP wanted it to do anyway. So presumably, it does seem like perhaps after 6 months, after some divestitures, BHP or somebody else might bid for Anglo.
Don't think so. Because the main part that BHP wanted to get rid of was the Kumba iron ore business, which presumably was for some sort of antitrust reasons, something like that, because BHP are enormous in iron ore and really don't need any more iron ore. So the whole thing is just sort of like so dumb on the part of BHP. It's just like unbelievable because they say that they're basically interested in the copper businesses, but there were 3 mines which are important in Latin America. But why hasn't BHP done something itself in copper? Why can't it go and buy First Quantum or something else? Why spend $49 billion buying Anglo when it only really wants a few tiny bits of it? Tiny. The copper business is tiny, but a few strategic bits of it, because BHP doesn't want to get into De Beers or into the other things, I don't think. So I think the way that Anglo responded was good, and I think that I think the price was too high in the first place. Institutional investors said, "Oh, we want more." Well, of course they do want more, but I thought BHP were paying a pretty ritzy price for this thing, and it was a bad deal for BHP shareholders, more than a bad deal for Anglo shareholders. So that it's fallen through is probably a blessed relief for hardcore BHP fans, because BHP has shown itself to be sort of dumb in the past as well. It spun out South 32. Saying, oh, we don't like manganese, we don't like met coal, and we don't like whatever the other asset was that it had. It was the rump end of BHP, and it turned out to be far more dynamic since it's been set free from BHP than those divisions were when they were in BHP. So It's another case of BHP itself looks like a candidate for breaking up.
Well, BHP's timing on South 32, as you mentioned, was great because manganese and met coal have subsequently done very well. And I think the whole concept of the BHP Anglo hookup overlooked perhaps the fact that it may well have faced antitrust issues in Chile as well, given the concentration of production that would have given BHP there.
Yeah.
Okay, other government action on the geopolitical front. Claudia Sheinbaum was elected the next and first female president of Mexico in a largely expected landslide victory. She's an environmental scientist and the named successor of current president Andres Lopez, or AMLO. Chris, given her closeness to AMLO and the fact she's an environmental scientist, do you think she will be positive or negative for the mining sector in Mexico?
Well, what her personal feelings are probably don't come into it all that much because Mexico's a bit over a barrel. It's oil over oil barrel because its oil income has for a long time supported Mexico. And Mexico's two main exports are, as we know, oil, mineral products, and drugs. The drugs part of the equation is, below the surface, so we don't know how big that is, and the people who actually, get all the profits from that, we won't go into that. But the mineral sector is very important for Mexico, and Mexico has a number of global majors, companies like Grupo México, Peñoles, Frisco, etc. Does he really want to cut them off at the knees? I don't think so. I think that Mexico might already have made certain moves, like the move against open cut mining, to sort of like reduce the ravaging of the landscape that open cut brings, and the environmental problems that come from enormous tailings dumps, enormous overburden dumps, all those type of things. And I think that Mexico here might actually be a forerunner of a trend around the world against open pit mining when open pit mining is not required. And too much of the mining sector in the past has been leaning on the easy option of making, what they perceived was an easy option of digging enormous pits with phenomenal stripping ratios, enormous waste piles, whereas underground mining, which is traditionally the way that things were mined, the vast bulk of mining up until probably the Second World War was actually done by underground mining because it involved a lot of people, and they didn't have the equipment of the size, etc., to move mountains, as is now the case. So I think that Mexico's ahead of the curve on open pit mining bans. I'm not sure that all open pits will be banned, but certainly, ones that you can see from outer space, they'll have to justify themselves a lot better as to why they're doing this. And I would suspect that policy will carry on. And I don't think it's a bad thing. Does Mexico not want mining? I don't believe it. Mexico wants and needs mining because many of these areas, of course, if you stop the mining, the villagers have nothing going for them and will move over into the other sector, which, of course, is the drug distribution and cultivation space. And that's the least of the things that Mexico wants at the moment because the country is being ravaged by drug-fueled wars and internecine strife. So that really needs to not have extra fuel on the fire, which would be created by, mass redundancies of miners in isolated pockets of the country.
I think it's an interesting point of view about mining perhaps returning to its roots of the past. And obviously, underground mining has a lower greenhouse gas emissions typically than big open pit mines. Let's talk about royalties. A couple of royalty deals announced this morning. B2 Gold announced it agreed to sell a portfolio of 10 precious and base metals royalties to Sandbox Royalties, which will now be renamed Versamet Royalties. 90 million Canadian in stock, representing an equity interest of 33% in Versamet. The package includes royalties on Kiaka, Twiga, Quebradona, Macoa, Primavera, and 5 exploration stage royalties. B2 Gold has retained its silver royalty on Glencore's Hackett River base metals project, none of it in Canada. Versamet's royalty portfolio now includes 28 royalties, and its main investors also include Sandstorm Gold Royalties and Equinox Gold. That wasn't the only action this week. Vizsla Silver plans to spin out a royalty company on its Panuco silver project in Mexico into Vizsla Royalties. A 2% NSR there on Panuco. Great Bear Resources did something similar to great success a few years ago. Chris, a couple of questions here. How many royalty companies do we need in what is already
lot less
space?
A lot less. We saw the first flush of royalty companies around 3 or 4 years ago, and then they got rationalized. We're going to have these companies rationalized again because it's sort of like crazy. Spinning out one asset royalty companies, no value added whatsoever. Why, if there's a royalty, why doesn't it stay within the mining company, and then the mining company has more earnings to distribute as a dividend? It's just sort of like an excuse for the miner to say, well, we don't need to pay a dividend because we spun out a royalty company, and that will pay you a dividend. And all the earnings from the main company will come to us, the executives. So because we know that there's a certain school of Canadian management who don't believe in dividends, but do believe in paying themselves most of the revenues. So yeah, I think we need to say this is a bad trend. Bad trend. Well, not necessarily the Bema Gold deal, but definitely the other one. One asset royalty companies, waste of time.
Well, it sounds like you've answered my next question. You are not a fan of this trend. What about in general terms, companies encumbering their assets with royalties? A lot of the majors I speak with say when they see a royalty on an asset, they walk because obviously it limits their potential upside.
Yeah.
So, it closes down M&A possibilities. Why do companies continue adding royalties to their projects, do you think?
Well, yeah, you mentioned majors. It's the people beneath the majors who are actually generating these royalties. Man, the first flush of royalty entities out there, and royalty entities like Wheat River and Franco-Nevada have been around for a long time. These were royalties that were created before the mines were even producing, and they were created by previous owners of many of these mines, or discoverers or explorers or whatever. But now royalties being seen as sort of like pushing on an open door as a means of raising funds when the market won't give you funds for the asset, and they tend also to be non-dilutive of the they're definitely non-dilutive of the main company when it has to fund the mines that it's building. The traditional way was, okay, how are we going to fund the mine? We're going to borrow some money. We're going to issue some equity. We might do a stream of the secondary assets, the secondary metals, the byproducts, which all made sense. But now, they're carving into their key revenues by flogging off royalties that otherwise would be revenue that would go to the bottom line of the company that's creating the royalty company, or the royalty spin out. So yeah, it's we're robbing Peter to pay Paul, and it's a bit of a shell game, and I think investors are sort of seen through it. We've had a rationalization of the royalty space. A lot of premiums 3 years ago. Now, some of them are sort of trading at a bit of a discount because people now can run the slide rule or the magnifying glass over some of these portfolios and find out that they're not as good as having 150 royalty deals, but only 5 of them actually generating revenue, makes it look much bigger than it really is. And I think we'll see a trend of maybe of bigger players in the royalty space picking up, or going after some of the better royalties in the smaller royalty companies, and then creating new codes. And these are new codes of rump assets that aren't going to be built in children's lifespans, let alone anybody else's. Are not going to be worth much. There's a lot of rubbish in royalty companies at the moment. Second and third tier assets, they don't talk about, but they all go sort of like padding to the NAV. But, sometimes the operators of these companies go bust, and then it becomes something that figures in the earnings statements of the royalty companies as a NAV write-off. And people will then say, "Oh, I never knew that they had that royalty, and that royalty isn't performing." But suddenly, it's actually cost the royalty company something because they've had to write it off.
Well, royalties may be seen as a non-dilutive financing mechanism, but the dilution there is often invisible because it's something that stays on the company's balance sheet forever. Let's continue talking about money. A couple of one sort of financing announced this week, a big one. Fortuna Silver Mines announced that it will issue a 3.75% convertible senior note due 2029 for $150 million US, up to a possible 172 million. We'll use that to repay bank indebtedness, fund working capital requirements, and fund the repayment of its existing 4.65% senior subordinated unsecured convertible debentures. The new paper is convertible at $6.59. The company had $123 million of debt at the end of the first quarter and $44 million in convertibles that are just about in the money at $5 per share. Fortuna stock fell 14% on the news to just above $5. Chris, recent weeks have seen a number of big financings and companies refinancing debt. Why do some miners find it so hard to pay down debt?
Because they're not making enough money running their mines. I think it's a good move for Fortuna to do this. If the markets are giving debt funds, then why not? Better than equity. It's sort of equity though, if it's in a convertible mode, but they're sort of getting away from 5% of $5 convertibles to a much higher number. I don't know why the market sold this off. I don't think it's really bad news. I think it's in Fortuna. I've known since Fortuna had like one mine in Oaxaca in the south of Mexico, and it's done brilliantly. It's become sort of a quasi-major out of really 10 years of a hard slog when many people when they're not interested in it 10, 15 years ago. But they've really been showing that they can bring home the bacon. And they were seen for a long time as being a Latin American only company, and now they're getting out of that sort of like box and becoming sort of like a global major. I like them, and whether one likes debt, maybe it's an interesting sign that certain investors that don't want to hold equity in the sort of like quasi-institutional people who don't want to hold equity in the mining space, sort of get a quasi equity, quasi debt, instrument that they can play in. So if anyone comes and criticizes them for holding equity, market to market or whatever, they'll just say no, it's debt. But 3.75% is pretty low. It's pretty low.
I can only imagine it's sold
with these rates.
Fortuna only announced the interest rate and the convert price this morning, so I can only imagine it's initially sold down because the market was expecting that the debt would be priced higher and the convert would be priced lower, as some of the other refinancings we've seen in recent weeks have been. Also in the money this week is Canadian venture capital firm 3D Capital and 13133366 Ontario, which obtained a settlement from Palisades Gold Corp, Colin Kettle, and Newfound Gold. The defendants will provide 3.75 million shares in Newfound Gold, worth about 12.9 million US dollars at the moment. 3D Capital initiated a lawsuit after it sold 13.5 million shares in Newfound Gold to Palisades in November 2019, at 8 cents a share. It alleged Palisades was in possession of information material to the transaction that was not disclosed. Shares in Newfound Gold ran up to a high of $9.40 in January 2021 on the back of high-grade drilling results at its Queensway Gold project in Newfoundland and Labrador in Canada. The settlement includes no admission of wrongdoing. Chris, as an investor, have there been times when you have bought or sold in a situation where you later believed relevant information was not disclosed?
No, sincerely, I don't have any relevant information that the market doesn't have. It's good to see that they went after them, and regulators should have gone after them. It shouldn't have to be a private company that was doing the lawsuit. But the regulators in Canada are rather toothless on this matter, so companies have to take it to court themselves, and it can be pretty expensive for companies to pursue these matters, and inconclusive. So it was interesting that they did it, and good that they won. Let's hope that we see more of that.
Okay, sticking with orogenic gold projects, Queensway's orogenic gold, West Red Lake Gold Mines outlined key mine infrastructure and development projects it plans to undertake at its Madsen project in Ontario, in the Red Lake district there, including a 1,200-metre haulage way to connect the east and west portals and declines, permanent primary crusher in the mill, initiate a test mining program to assess long-hole stoping and cut and fill methods, drilling of up to 39,000 metres, as it works towards a pre-feasibility study and mine restart plan, which is targeted for release in 2025. Chris, everybody seems to have an opinion about Madsen and whether or not it can be made into a profitable gold mine. What is your opinion?
Well, it seems like they're moving forward because they believe it. Time will tell. Time will tell. Maybe the changed gold price environment, changes the economics of everything, really. And so what didn't work a couple of years ago could now be dramatically more doable. We shall see.
Okay, higher gold price floats all boats. Let's end with some fun, yes, if I may. Cool. Okay. To recover from the effort of building the Greenstone gold mine in Ontario, the Equinox gold team is organising a bicycle ride 3,634 kilometres from Vancouver to Geraldton, where the mine is based. That is they aim to raise money for the Geraldton District Hospital. Equinox mine sites in California, Mexico and Brazil are also sending teams to raise money for charities in their local communities. Equinox so far has raised almost $1 million Canadian for the hospital through early sponsorship. For more information and to donate, please visit www.ridetogreenstone.com. Chris, this seems to be both a very good way of celebrating bringing a new mine into production and potentially giving lots back to the communities broadly across the company and its asset. This seems to be something very positive and perhaps something that more companies should do.
Maybe. Some of the companies have the money to actually give $1 million away to the hospital, and it would be tax deductible. So we shall see. If they have the money, maybe the executives would be better off sticking to their knitting and getting off the bicycle and just writing a check and giving it to the hospital.
Well, I suppose that's a good argument. I imagine it's going to take quite a bit of time to cycle Vancouver to Ontario, and that management time, perhaps the value of that management time could perhaps be better spent running the business.
Exactly.
Okay. But in some ways, that's all good, clean fun. The next bit isn't. An air hostess on Air Indian Express was caught this week trying to smuggle 1 kilogram of gold in her rectum. 1 kilogram of gold could be a 12 centimeter by 5 centimeter bar. And really putting the glitter in the Gary, to twist a UK slang idiom. And apparently it's not her first time either. High gold price creates crazy actions, I guess, Chris.
How do they know it's not her first time? I don't think we want to go there, but why bother? Why bother? Gold is sort of like a global fungible market where the price is almost the same everywhere. So why bother?
Maybe to avoid import controls, taxes, that kind of thing. I imagine a lot of that goes on here in Colombia and Ecuador and elsewhere, where in Latin America, where there's a lot of illegal and criminal gold production.
Yeah, but look, people have been getting it out of Latin America and out of Africa and out of everywhere using other means. I think that she wasn't that bright. She made a very difficult task for herself. Let's put it that way.
Well, yeah, there's no information given as to how or why she was caught. Cool. Let's end it there before we descend ever further into scatological what ifs. Chris, thank you very much for joining us today.
Thank you.
And I'm Paul Harris, and this is Kitco Mining.